Well, Tesla Motors is on a tear. For the past month, Tesla has been skyrocketing up straight towards $100 a share after languishing in the 40s or below for several years. It's also finding no shortage of buyers for its bonds, even though they offer only 1.5% interest. So why is Tesla doing so well while most other electric car companies like Fisker and Coda have been going bust? Is Wall Street's vision a little too rosy right now? A debate on the market's infatuation with Tesla between Lauren Fix, the car coach and AOL Autos blogger, and Colin Rusch, senior research analyst for Northland Capital Markets. Folks, good to see you both. Lauren, first to you. Does Tesla deserve all the praise and particularly the high price of the stock right now?
Well, I think they produce a really cool car. And if you're into electronics, and the NVIDIA chips that are in there are very, very edgy and really cutting edge as far as for consumers. If you want that and you want to make a political statement or a personal statement, it's a great car. But as far as the stock, that's a whole nother animal. And I think that it's inflated. And we've put them up on a pedestal when their total sales for this year has only been 4,750 vehicles. And you look at the other manufacturers that create EVs or other cars in that category, and if you compare, it's really not that big of a deal, but we've overinflated it and given it a lot of push.
All right. Now, Colin, we're all happy that they had a profit of $11 million the last quarter. I almost said a big profit because it was $11 million. And $68 million of the money coming in, as you know, were these carbon credits from California. So you take out the $68 million in the carbon credits. And my question to you is, can Tesla's business model survive without government input, whether it's the carbon credits or the money that they give back to consumers?
Absolutely. And I just want to do one fact check real quick before we get started.
Sure.
The company actually sold nearly 5,000 cars in the first quarter. It was 4,750. It was a guidance, and then they ended up delivering 4,900 for the first quarter, so almost 5,000 cars. Onto the credits, absolutely. We're in the very, very early stages, first inning of cost reduction on this vehicle. And so to see them, benefiting from these credits is something that is always a concern for an analyst to see what the sustainable business model is. But as we move forward into higher volume of production, we're going to see significant cost reduction just from their suppliers, let alone what they're going to be able to do on the technology side as they pull costs out.
Lauren, what do you say about that? Could its business model survive the pullback of government assistance?
Well, the nice thing is that they're actually selling some stock in order to pay off this government loan. So I give them credit for that. It gives them a little bit more freedom. But what I do think is that the average consumer can't afford $70,000 for an EV car, and they're expecting 21,000 vehicles to be sold this year. That may be a very aggressive estimation when you look at the sales of EV cars across, and every single manufacturer is taking a loss. So far, they're making a profit. But that's why I say you got to really look at these numbers and take a look at their financials. And I'm not a financial analyst. I'm an automotive analyst, so Colin's the expert on that. But I will tell you, I personally wouldn't invest in the stock. I think it's artificially inflated. It's almost like a pet rock. Everyone wants to get on board, and then eventually, the stock's going to drop and level off, because I don't think that people can afford $70,000 when the average sale of a car is about $25,000.
Colin, a pet rock. Is that what Tesla is right now?
Not by any stretch. The market that they're addressing is a 2.5 million car market a year. Selling 21,000 cars is less than a fraction of a percent of the addressable market, and we're looking at the premium vehicles. I don't think the comp here is the other electric vehicles. We're really looking at Mercedes, BMW, Audi, those types of vehicles. Over 45% of these vehicles are leased. This isn't a cash out-of-pocket sale. Tesla's introduced a leasing product here in the last month and a half. We do think that's going to enable a significant amount of sales. We are seeing them with at least another 2.5 quarters of backlog and orders in hand. At this point, I think we're just scratching the surface here in terms of total demand. What we've seen in the market so far is that once these cars get delivered, it causes a stir in a neighborhood, preschool parking lots. The cars are great. They perform extremely well. They're built for luxury buyers as a third car in the home. This isn't a commuter vehicle. This isn't a road trip vehicle. This is a commuter vehicle. It's a toy.
Well, it
certain folks.
It is. But on the other hand, with a price range of $62,000 to $87,000, it's not for everybody. On the other hand, Lauren, I got to put it to you, Consumer Reports says they have never, ever in the history of Consumer Reports seen a better constructed car. Unlike the other car companies, Fisker and Coda, that went bust or are in the process of going bust, this is a premium car that gets the highest rating. Also, unlike those other car companies, Elon Musk has put his own money into this. Yes, and they are going to be paying off the government loans. They did get government loans in the beginning, but this is a guy who knows how to create a company that succeeds. So how do you answer those?
Well, I think that first off, there is no infrastructure for dealerships right now, so that is definitely going to hinder total sales. Yes, they're available in Santa Monica and New York and certain cities, but in order to make those numbers that he's looking for, that 21,000 a year, you need to have a dealership infrastructure. And right now, they're trying to sell direct to consumers. That is definitely going to be an issue because you got service facilities to keep in mind. Remember, once these cars start getting mileage on them, they're going to still need to have brake pads and wiper blades and things that wear and tear. And that's where you're going to need to have some sort of dealership infrastructure. And if no one has a Tesla dealership and they're only selling them basically at malls and so forth, is going to be an issue with that. And a lot of states don't want Tesla to sell vehicles direct to consumers because of franchising laws and franchising groups that are saying, hey, we're a dealer group and we want to sell to the consumer directly. And so that's going to be an issue.
We're not going to come to any kind of agreement between you two, but Colin, I just want to know how high you think this stock goes. It's now trading at about 90 bucks. Some people say it could go up to 200. What say you?
You know, we've got a $95 price target. We're discounting back 2016 earnings. We have it's a 12-month price target. You know, it's really approaching that right here. You know, if they execute on this business model over the next 5 to 7 years, this could be $160 to $170 stock. Right now, where it's a little bit early to say that it's going straight there. They've got a lot of execution in front of them.
According to Colin, you ain't seen nothing yet, folks. Colin Rusch, Lauren Fix, great to see you both. Thanks for coming in. Liz, to you.
David, I want one. That's all I have to say. I just need a garage first.